Digital assets and blockchain are very, very different fundamentally from how traditional infrastructures work. The way I see tokenization is a spectrum of different assets in the value prop. I think there's biggest value at both ends of the spectrum. It's sort of barbell shaped.
This is the Assetizer Podcast.
Hello, everybody, and welcome. My name is Tom Lyons, and this is the Assetizer Podcast. And today, I'm really excited to have with us Nisha Surendran from Citi, the head of digital asset custody at Citi. And we're going to take a trip in this particular episode into the down into the machine, into the plumbing of digital assets. And it may sound dull, believe me, it's anything but, because this is where all the action happens, and this is where a lot of the innovation and a lot of the magic is going to happen. So Nisha, hey, thanks for making the way to Zurich and for being on the show.
Firstly, Tom, thank you so much for having me here. This is great. I've been a big fan of your work and also the work broadly at Gen 2 and the assetization stuff that's been going on. Big fan of the Swiss ecosystem with the whole AMCs, and I think you guys had assetization before tokenization as a thing. So yeah, looking forward to being here.
Well, great, fantastic. Yeah, well, we're also excited. And I remember I saw you at Asset Rush when you were on stage with a different job at the time. So congrats on the new position. And maybe with that in mind, you can start off by just talking a little bit about your background and how you ended up being the head of digital asset custody at Citi.
Sure. So I have been a banker for the longest of time. I've been working with companies, primarily startups, and trying to help them go global with Citi and our products and services. So I'm a computer science engineer by education.
Okay.
So I always had that niggling, like, engineer trapped in a banker's clothing situation. And I was part of the whole problem and the infrastructure of, like, why does it take so many days to send payments out from Germany to Brazil, and like, can we make this any faster? So sort of living with the infrastructure of today and making it work for our clients. And then along the way, I think around 2020 is when I got bitten by the blockchain bug. And I looked at the whole Bitcoin white paper, and I saw that there was this parallel ecosystem where you could have Rails, which basically fixes the plumbing for the missing layer of money that the internet has. The internet never had a layer of value transfer. And so, yeah, I went headfirst into it. And then fast forward, now I have an opportunity to work on some really cool stuff in Citibank around digital assets.
You're the head of digital asset custody, and custody is a very important part of the equation when it comes to digital assets, especially. So you can tell us a little bit about what is digital asset custody, how is it different from regular asset custody, and like, what are the challenges that you're facing there?
Yeah, if you can bear with me for 2 minutes, I would like to just share my
mental
model of how I think about digital asset custody. So what's fundamentally different about blockchains is the way you store value on the blockchain, right? Like, everyone talks about, you talk about money being digitized, and everyone's like, oh, we already have digital money, which is very few people actually transact in cash these days.
Yeah.
So what makes digital assets different from other digital representations of money or assets? So there are two fundamental concepts here, and I sort of simplified to a mental model of lockboxes to make me understand. So the way I think about this is, you've got a lockbox. Think of a glass lockbox. So you can see what's inside, and it's got a number lock outside, right? The number lock is like the cryptographic key. And essentially, safekeeping assets in the lockbox boils down to safekeeping the cryptographic key that gives you access to that. And you can put anything of value inside it. You can store digital representation of money. You can store assets like Bitcoin and Ethereum, which are native assets of their respective networks. You can have digital securities in it. You can have NFTs. You could have anything that you think is valuable in it. And safekeeping the asset comes down to safekeeping that cryptographic key. And that's what custody boils down to. And extending this mental model, the second layer here is the network itself. So it's just a decentralized network of these lockboxes distributed globally, no single person in control. And the network essentially just brings all of this together and enforces order in terms of who sends what to whom, how are the transactions kept in a semblance of order, how does the network kept safe, prevent from attacks and things like that. And that's what the blockchain does. So zooming back out, custody is just keeping that access to that lockbox, the cryptographic key, safe. And that lockbox is nothing but the blockchain address.
Right. And for people who may not be familiar, the lockbox itself, the cryptography around that is pretty secure. The weak link is the key, is the code, right? That's what you have to really.
Exactly. So the box itself was secure because the box is basically accessed by the cryptographic key. You're
Right.
basically signing or not really encrypting. You're signing what's inside that with the key. So not your key is not your crypto, right?
Yeah.
So safekeeping that cryptographic key is of paramount importance, and that's where custody comes in.
So as I mentioned, I got into blockchain in 2016, 2017, and I know that even back then there was interest in the technology from the larger banks, but it's been quite a bit of a road to really get into institutional adoption. And I'm always curious when I speak to people in your position to really understand, what have been the challenges, maybe technically, maybe organizationally, maybe regulation. I'm sure there's plenty of them. Right now we're in a real mainstreaming moment, but what have been some of the challenges of adopting and really working with digital assets in a big corporation like Citi?
I think the challenges when it comes to digital assets are mainly threefold, right? The first one is regulatory. We've got different regulatory regimes across the world at different stages of acceptance and evolution with respect to digital assets. And thankfully in the US, over the last 6 to 7 months, we've had a big change in the outlook towards digital assets. A lot of the more onerous rulemaking has been rolled back. So that sort of paves the way, especially for US banks, to look at digital assets and do more in the space. So the first was regulatory. The second is from an operational perspective. Digital assets and blockchain are very, very different fundamentally from how traditional infrastructures work. Firstly, crypto assets are bearer assets, which means that the only place where the ownership of the asset is registered is on the blockchain, and they're bearer in that if I transfer something to you, you're the owner, right? There's no other place of record. Whereas traditional securities are not. They're usually recorded in a CST, so there is a place to go and check, which is outside of the bearer nature of these assets. So that means that the operating model when it comes to crypto assets, it's fundamentally very different. And to add to the operating model complexity, this is also a 24/7 asset class, whereas most of the traditional assets are not. We're like 9 to 5. Yes, there is a move more broadly towards an always-on, instant, real-time infrastructure outside of crypto assets, but it sort of accelerated the whole pace of always-on, 24/7 instant settlement. So that's the second bit, the operational side. The third is the whole angle around cyber and risks, and a lot of risks that we don't fully dimension yet, right? Like this quantum on the horizon, does that break cryptography today? What happens if there's a 51% attack on the blockchain network? So there's a lot of newness in terms of risks. And for us as regulated financial organizations, when we get into a space where there's a lot of these new risks, we need to move carefully. We can't afford to move fast and break things, so we need to take things step by step. And thankfully, we're now in a place where we're bringing all of this into the regulated financial systems fold, but we need to be very cognizant of the AML, KYC, sanctions, risk, and compliance around the crypto ecosystem in general. So all in all, it's not an area where we could have moved fast. We need to take very measured steps one by one. That's what we're working on.
Okay. There's so many things there that I want to unpack. I want to get back into the risk stuff, definitely for sure. But maybe before we get into that, was there also a cultural aspect that had to be dealt with? Because I know that I've been talking to a lot of larger institutions for many years now that are interested in it. They're always kind of like, yeah, we actually have a kind of a blockchain custody thing in the thing, but we're not doing it because this isn't right, or the risk people can't deal with it, or. So was that also an issue at Citi?
Our first role is to make sure that assets are safe and secure for our clients. And so we'll have to make sure that we look at it in the lens of what could go wrong here, what's the impact, and what do we do about it. So with blockchain and crypto assets, with blockchain in general, right, while the technology and the power of the technology was always there and it was always promising, the things at the boundaries around, starting with things like the speed, right? The first thing we looked at was the throughput of these networks are like tens per second, whereas we're handling transactions in thousands of TPS across like payment networks and things like that. So how do you does this fundamentally scale? This used to be the discussion a couple of years ago.
Right.
Thankfully, we've now had networks which are able to handle this kind of speed. So it's no longer the point of contention whether blockchain networks can support that kind of TPS. The other angle is around privacy, right? We take confidentiality of client information very seriously, being a regulated institution. And with blockchain, it's a little bit of neither here nor there. There's pseudonymity, but it's if you're able to link the address to an identity, you sort of see everything on the blockchain. So how do you feel about client transactions on this network? So, and there are mental models now, and there are operating models where there is a level of privacy. There's like part private, part public transactions. So a lot of these things have also evolved.
So you also mentioned the quantum threat, which is something that a lot of people have been talking about for a while. And maybe you could also explain a little bit what that is and how serious you think that it's going to potentially be for these crypto networks.
So in terms of the risks on blockchain networks, especially the decentralized public blockchain networks, there's a lot of reliance on the public key cryptography. And there is an expectation from experts in this space that the cryptography as we know it today could be broken once quantum computers become a thing. So it's a known that it's likely to happen. I'm not sure exactly what the probability of it is right now, but expecting that on the horizon. I think there's already work done with the different networks and with the cryptography to sort of make them quantum proof. And so we just need to stay on track of what the developments there and what do we need to do to change the infrastructure at the infrastructure level to accommodate that.
Right. Yeah, that's what I understood. We can make quantum proof cryptography now. The problem is all the stuff from before is going to be open.
Yeah.
All the transactions that happened in the past on the blockchain. Very, very cool. Okay. Another thing we want to talk about is interoperability. So as with any new technology, when blockchain appeared, first there was Bitcoin, and then all of a sudden a bunch of other blockchains came up, and as the industry was built from the bottom up. So we see the same thing in AI now. There's lots and lots of different chains and lots of different approaches, which is normal in situations like this. So now you have a fairly, I would say, heterogeneous technical landscape, right? So how is Citi going to deal with that, or how do you know, how important is the ability to be able to connect these networks, or do we expect to have at the end of the day one master network, or what's your feeling on that?
Interoperability is a big topic for us because yes, there's blockchain to blockchain interoperability in terms of how do you move assets between different networks. But I think we have a more near-term problem on interoperability.
Oh, yeah?
As a regulated institution. It is how do you make the blockchain infrastructure interoperate with the traditional infrastructure? Mm-hmm. Because the seams of where the traditional brushes up against the digital, that's where a lot of our work is going on right now. Let's just take a step back and see what this involves, right? So today you have a traditional, say, custody infrastructure where you safe keep assets at different CSDs. The account structure is different. The way the infrastructure is set up is very different. And then you look at the blockchain infrastructure, you start with having assets at addresses controlled by cryptographic keys. Mm-hmm. And the best practices in some of these networks is even to like rotate addresses and wallets. So how do you map all of this like ever-changing like assets at different addresses to a static account structure on like a traditional accounting system? That's the first level problem. Mm-hmm. The second level problem obviously is blockchain infrastructure is 24/7, it's always on, and then you're sort of, again, bridging the seams there between a traditional infrastructure, which is, yes, moving towards more accelerated settlement. There is a push towards shorter settlement cycles with the move to T+1 in different markets, with the move to more like real-time, less batched, more instant settlement and things like that. But crypto is, as it is today, it's all 24/7 real-time. So sort of bridging that roadmap of accelerated settlement to something that's 24/7 today. So in simple terms, this means that like you need to align your weekend availability, your green zones to match and support the digital asset ecosystem as it stands today. So that's just the interoperability of the traditional with the digital, which is the first level problem to solve. But yes, as things start to get scaled, you will start to see assets in different networks. And I think there are different solutions on the market in terms of bridging these assets, in terms of wrapped tokens and things like that. But yeah, interoperability is a big problem.
And I would imagine that also introduces yet another risk vector, right?
Yep, it does. So anytime you are talking about moving things from one infrastructure to another infrastructure, you need to be careful that you're actually encapsulating everything as is and it's transferred. It is a vector.
Great. Now, I've been pushing the whole risk thing a bit, and I don't want to make everything sound so bad. It's actually not. I mean, a lot of there's an incredible amount of potential here in this technology. So I'm really curious maybe to talk a bit about, where you see the advantages, and also we haven't talked yet about what Citi's offering is in this space. So I'd like to maybe get into that a bit.
Yeah. So we have been looking at blockchain as an infrastructure for a while now. So we're starting to look at public blockchains now, but we already have our Citi token services for 24/7 cash movement within Citi network. That's been live for a while now, because what our clients are asking us for is always on 24/7 movement cross-border. And so that's a solution that was prioritized first. We're looking at getting into stablecoin reserve custody, and our CEO, Jane, had disclosed this in the quarterly call, where we're also looking at building our digital asset custody infrastructure, which is work in progress. And another area of prioritization for us is on and off ramp for fiat to digital currencies.
Okay.
So money, custody of crypto assets, and stablecoin reserves, these are like foundational areas.
So on and off ramp from my digital assets to my Citi account or whatever.
On and off ramp between
fiat,
like digital cash and fiat cash.
And fiat. So we've talked about digital assets and the custody side. Now let's get into the digital assets themselves. So everybody's talking about tokenization. It's the big thing right now. From your point of view, what are the most suitable assets for tokenization today and maybe in the near future? Because I think it's going to get wider and wider, right?
The way I see tokenization is a spectrum of different assets and the value prop there. As where things are today, I think there's biggest value at both ends of the spectrum. It's sort of barbell shaped.
Okay.
At one side, you have the highly liquid, high velocity assets like tokenized money market funds, where there's a lot of value in moving those quickly through the system and unlocking like reduced settlement times, where there's a lot of use as collateral and you sort of unlock a lot of locked capital in that sense. At the other end of the spectrum, I know this is a lot closer to your heart, and the work that Gen2's been doing is the less liquid, less accessible assets, be it private assets, be it real world assets, where just solving for the fact that these assets do not have a financial infrastructure today. Like everything in the middle, there is a reasonably functional infrastructure. Which at least works like 9x5. So you've got equities, you've got bonds, you've got all of these in the middle. You've got the highly liquid assets on one side where the velocity is important. And then you've got the highly illiquid assets on the other side where there's no infrastructure.
Nisha, maybe going to that side of the barbell, which you said that's near and dear to our hearts here at Gen2, which is really on the non-bankable side of the spectrum. How do you, or can we get more into detail in how being able to tokenize these things and custody them is going to open up new possibilities for transacting with these assets, maybe even new markets?
Yeah, so the first step of getting assets to the broader financial ecosystem and world is to make them bankable. And I think it's a very Swiss term, it's a very Swiss AMC term. But what does it mean to make assets bankable? You're essentially bringing these assets, which could be sitting off in their own silos, in maybe paper documents, in some book entry record somewhere, as ISIN instruments into the financial rails. And that's what custody enables you to do, because you now have them within the same rails that power all of the other assets.
Right.
So now you can access them in a safe and sound manner, be it crypto assets, be it tokenized real world assets. There is that underlying, okay, these are custodial assets, these are now accessible. The second is you have them brought into the whole AML KYC compliance scheme of regulated financial products, more relevant for crypto, but also every product is within the scope of AML and KYC anyways. So it brings that more formally into that structure. The third is you apply the same level of operational efficiency and risk and controls to these products as is applied to other financial assets. Now, bringing all of this enabling ecosystem and integrating it into the financial infrastructure now enables these assets to be then used for not just for holding and for selling and for trading, but then it opens up new operating models of financing, of using them as collateral, getting leverage against them. But to be able to get to that stage, first it should be usable alongside other bank products. When I say other bankable products, it's like equities, bonds, and things. And that's what tokenization does to not just private market assets, but also like using custody to bring crypto assets into the fold of the mainstream financial ecosystem. That's what that enables.
If I had a very high value art collection and I tokenized it, then I could then use it as collateral, lend against it, or I could stuff like
as
that.
long
right?
as you find someone to value it, price it, and
right,
yes,
so
definitely.
Right, and that's also something we would talk about at Gen 2, writing a report on this. There's also tokenization is great, but there's never going to be you're never going to get away from the the legal and the regulatory and all the aspects around it, right? The contractual stuff.
Absolutely. I think sometimes as technologists or folks who are very in the digital asset and blockchain space, we have like a tendency to wish away all of the other stuff.
Yeah, I know.
But I think technology can solve a part of the problem in terms of the delivery, that you absolutely need to start with the legal, contractual, the business case and the framework for how this would work. And then, tokenization and technology can help solve how we do things, but it doesn't solve the what and the why. There's things about, can I just tokenize X, Y, Z and put it on the blockchain and then you'll find buyers? I don't think you're going to magically get that, but we have a tendency in the ecosystem
no token's
to
going
do
to create a
that.
market for you.
Absolutely.
Token's not going to give you liquidity. That's for sure. One other thing on the use cases I want to talk about, which we haven't yet, is one of the great selling points of blockchain technology is the smart contract side, right? You can have programmable assets, programmable money, programmable digital assets, etc. like that. To what extent do you think that's important? And are we going to, how fast are we going to start getting there?
I think programmability would be like a second layer of unlock once we get assets custodied and into the traditional ecosystem, the blockchain-based assets. But I think programmability is going to be super powerful because we have traditional ways of working around programmability by operationally enforcing these conditions. Like you take a typical escrow account, right? That is technically a programmable account because it basically says if X, then Y. And that's what the blockchain will do. The power now, though, is you can build this logic directly into the settlement layer. So rather than having an application layer where you have the logic and then somebody triggers the workflow and then you go and enforce that at an account. So there's so many touch points. There's a lot of manual stuff to support programmability in the traditional world. But using blockchain and smart contracts, you can just build that right into the settlement layer, and that's incredibly powerful. And the second part of this programmability is because smart contracts are sort of like self-encapsulated, right? You can have an asset, you can have its conditions, you can have its behaviors all encapsulated together. They can now be what's composable in the blockchain terminology is you can have one program, one smart contract, do a few things, trigger another smart contract, and that does a few things. So you can start building more complex financial products. And this is what we're seeing in DeFi. And just going back to the analogy of the lockbox, how this works is basically nothing different from that model. So in the lockbox, not only can you have assets of value, but you can also have a piece of code. And so now you just add a few buttons to it. So you're triggering specific behaviors of that code, which everybody can see, everyone can audit. It's very deterministic in terms of what it says it'll do. And that gives you the confidence of being able to leverage this ecosystem and infrastructure to have automated products built. So I think that's going to be super powerful, but we're yet to see the full value of this. It'll come.
Right, and then we really start to talk about fairly sophisticated and fairly broad-based automation, which I'm assuming is among other things, from a bank's perspective, an efficiency play, right? You can probably streamline a lot of processes.
Yeah, absolutely. I think programmability is going to be super powerful as we start to apply these across the layer. I think the first use case of Citi token services for trade, which was announced a couple of years ago, was actually replacing a letter of credit with a smart contract. And this was
Cool.
used as the ship goes through a canal where you're making the payments at particular milestones. These are now automatically released via a smart contract. So there's a lot of conditional payment use cases, which I think programmability will unlock.
So the ship goes to the lock, hits the button, the signal goes out, boom, we're good.
Yeah, not that simple, but eventually we'll get there. Yeah.
Okay, all right, great. So obviously, Nisha, these days we can't talk about automation without talking about AI. And despite the fact that everybody talks about AI and tries to bring it into the conversation, I think in this particular case, it's extremely apropos. Where do you see today and also in the midterm the application of machine learning or generative AI into the whole digital asset space?
So there are 2 or 3 areas where I think there's a big overlap of AI and digital assets. One is obviously the whole AML, KYC, just like trawling through all the data and identifying patterns and risk triggers and warnings and alerts. I think that's an area where there's a lot of potential. There's 2 other areas which I'm super excited about. One is AI solving for the problem that we have very poor user experience and user interface in DeFi and through the crypto stack. It's this day and age, we still have these hex codes, like, I don't know, like 64 different digits, and like that's where the security comes from, right? But with AI, we are now getting used to a different way of interacting and interfacing with technology. And adding that personalized layer of AI as a user experience into the DeFi stack, which leverages the automation. So AI has got its automation built in, but you also have these smart contracts with pieces of code there, which also have the automation. So as we get into the whole agentic AI space, being able to like set an intent of this is what I want to do, and it could be intent linked to payments, or it could be intent linked to, say, trading strategies, and then your AI app then your AI agent then just goes away and does those things within the limited domain. I think that's going to be super powerful. Super early days, but I think the overlap of AI in terms of personalized user experience, making up for the lack of a good UI and UX in along the digital asset stack, especially with DeFi and payments, I think it's massive.
Okay. This is one that I'm curious about, and it may not be a fair question, so tell me. But do you see applications in the other direction, ways in which blockchain can help with more secure AI, with alignment or with data privacy on the AI side?
What I've read a little bit about and what I know a little bit about is the fact that you can have cryptographic security on specific data. Like you can actually like map that this data comes from this person and make sure that they are adequately compensated. There are things like that blockchain can help with AI, especially cryptographic can help AI with. But I think more broadly, the fact that with cryptography, you can actually pin down ownership identity. I think that's going to be super powerful for AI to leverage.
Data ownership, okay. Well, Nisha, hey, thanks a lot. That was a really great conversation. I really enjoyed it, and thanks for coming to the show.
Thank you, Tom. This was a great honor to be here, and thanks for having me.
Oh, the honor is all ours. Trust me. Okay.